This lecture focuses on money, in particular, riba and zakat in Islam. In this lecture, we will explore some of the issues that arise for Muslims in the use of money. The first part of the lecture will look at the prohibition of riba, R-I-B-A. In the context of money, riba is often equated to bank interest. Riba is prohibited in Islam. In the second part of the lecture, we will look at charitable giving as something that Muslims use their money for. We will consider the institution of zakat, Z-A-K-A-T, one of the 5 pillars of Islam. We will also look at what involves and what the money is used for. In particular, we will look at a number of issues. What riba is, what the Quran says about riba, different understandings of riba, the prohibition on bank interest, development of Islamic banking, examples of Islamic banking in Muslim majority countries, the future of Islamic banking, and finally, the importance of charitable giving with a focus on sadaqah and zakat. So, what is riba? The word riba comes from the Arabic word raba, R-A-B-A, which means to increase, to grow, or to exceed. It is often understood to mean the excess or addition over and above the principal in a loan. For instance, the amount payable over the initial amount of a loan. For some Muslims, a riba is unjust or exploitative gains made in lending. For example, the practice of lending money with conditions that unfairly enrich the lender and take advantage of the borrower's vulnerable situation. For many observant Muslims, riba is simply equivalent to modern bank interest, whatever the form of interest is. So, from the very beginning, you can see that there are differences of opinion among Muslims on what riba is. What does the Quran say about riba? In fact, where does the prohibition on riba come from? Well, this prohibition actually comes from the Quran itself. The Quran is very clear that riba is absolutely prohibited. Let me just mention a few Quranic verses that have something to say on riba. In chapter 3, verse 130, the Quran says, O you who believe, eat not riba, doubled and multiplied, but fear God that you may be successful. In chapter 2, verse 275, the Quran says, God has allowed trade and forbidden riba. In chapter 2, verse 276, it says, God will destroy riba and will give increase for sadaqat, meaning charity. In chapter 2, 278, it says, O you who believe, be afraid of God and give up what remains due to you from riba, if you really are believers. You can see the strong condemnation of riba in these verses. There is universal agreement among Muslims on the prohibition of riba. The difference among Muslims is on the interpretation of what riba is. The Quran is also very clear that riba is different to trade, where people exchange goods and services for money. Let us look at the different understandings of riba among Muslims. The first question is, why is the practice of riba so strongly prohibited in the Quran? Well, riba is understood to be lending money at interest, often at exorbitant rates of interest. The prohibition of riba has traditionally been associated with financial transactions or practices that exploit the borrower. For example, in Prophet Muhammad's time, there were those who doubled a debt if a borrower could not make a repayment. If the person defaulted on repayment again, the debt doubled a second time. So you can see how this practice might put a person who was already struggling financially into an even more difficult position. Some commentators on the Quran note the practice effectively enslaved the borrower to the lender. They were placed in a position they had no chance of getting out from. So many scholars would argue that the prohibition of riba was put in place to protect people from this kind of exploitative behavior, from the kinds of transactions that would put a vulnerable person in a worse position, which in turn would cause tensions and other difficulties in the community. Other Muslim scholars understand the prohibition of riba to be based around the fact that the profit is unearned. The lender receives the extra money, that is interest, without having to work for it or do anything to earn it, just by simply lending. You can see how this understanding might be equated to modern bank interest, as we are very familiar today. These Muslim scholars believe even interest that is received is Islamically prohibited. So, interest as given or as received, both are Islamically prohibited according to these scholars. Still, other Muslim scholars argue that the ban on or the prohibition on riba was never supposed to apply to all forms of modern day bank interest. They say modern banking institutions don't work in the same exploitative way that lenders did in pre modern times. There are laws and regulations in place to protect borrowers. Also, if interest is received from the bank, it is hardly exploiting a modern day banking institution, according to these scholars. Again, the point is that there are different understandings of what is prohibited. There is no question about the prohibition of riba, but the question is what exactly is riba? Let us explore the issue of prohibition on interest a bit further. So, today there are two competing views about interest among Muslim scholars. Let us look at the first view, which I made brief reference to earlier. The first view holds that bank interest, or interest as it is practiced today, falls under the prohibition of riba. This most likely is still the most widely held view among Muslims. Since the 1960s, this view has been strongly supported by Muslims who have been arguing for an Islamic form of banking today, away from conventional interest-based banking and finance we are so familiar with in the modern period. These Muslim scholars argue, for example, that interest is unearned gain for the lender, while the borrower must pay back the loan even in the event of misfortune. They also argue that interest promotes selfishness, fosters idleness, and transfers wealth from the poor to the rich. Others say that it impedes social justice. All of these arguments are used to support the view that interest is something negative and falls under the prohibition of riba, or in fact equivalent to riba. Muhammad Uzair, a scholar of Islamic banking today, argues that interest in every form is equal to riba. He says, let me quote him: "Gone are the days when people were apologetic about Islam and contended that the interest for commercial and business purposes, as presently charged by banks, was not prohibited by Islam." Ayatollah Khamenei, the current supreme leader of Iran, defines riba as paying an extra amount by the borrower to the lender, and this is, according to him, prohibited unless in cases of necessity or severe constraint. He makes a distinction between lending at interest and what a depositor gets from the bank for the deposit. He calls this, what the depositor gets from the bank, as profit, not riba. He says, and let me quote him again: "The profits arising from the investment of the money deposited with a bank for safekeeping, which is used by the bank on behalf of the saver by virtue of an Islamic contract, is not considered riba, and thus is not problematic." Let us now look at the second view on the prohibition on interest. There are Muslim scholars who argue that interest, as we practice it today, in the banking system, for example, does not fall under the prohibition against riba. One prominent scholar is Fazlur Rahman, originally from Pakistan but later lived in the US. He was a professor of Islamic thought at the University of Chicago. Fazlur Rahman links the Quran's condemnation of riba to the historical context of the 7th century Arabian society. According to Rahman, the Quran condemns riba because of the economic injustice of Meccan society, where exploitation through interest on debt was widespread. Interest rates often were exorbitant then, he argues. Therefore, the main aim of the Quran was to prevent injustice by prohibiting riba. Rahman argues that the Quranic condemnation of riba does not mean that it prohibits bank interest in today's context, because moderate rates are one of the fundamental principles of today's economy, he argues. Rahman believes that Muslims should participate in the global economy, and even says that the prohibition of interest is un-Islamic. Another modernist scholar, Muhammad Asad, a commentator on the Quran, argues that the verses of the Quran that prohibit riba were revealed in the socio-historical and economic context of Mecca and Medina. Muhammad Asad says that the prohibition applies to profits obtained through interest-bearing loans involving an exploitation of the economically weak. This means that the question of what kinds of financial transactions should be regarded as riba is a moral one, according to Asad. It is based on the socio-economic motivation underlying the relationship between the borrower and the lender. Muhammad Sayyid Tantawi, a former Mufti of Egypt, who issued a fatwa which declared that harmless forms of interest, like interest accruing on savings or interest paid from the government for its bonds, do not fall into the same spirit as the original prohibition on riba. So, as you can see, these scholars do not see that all forms of modern day bank interest as falling under the prohibition on riba. They distinguish between different forms of interest based on their impact on the customer, whether it is negative or exploitative. Even so, there are still a great many Muslims, in fact, perhaps the vast majority of Muslims, who strongly believe interest should be avoided in their banking and financial transactions. In fact, we could say that probably for most Muslims, riba equals interest. So there is agreement among Muslims on the prohibition of riba, but there are disagreements on the meaning of riba and what it involves. Let us now look at the development of Islamic banking. The prohibition on riba has led to a rise in what we call the Islamic banking movement. This movement has seen the development of institutions, transactions, and practices that try to avoid modern day bank interest. The movement emerged in the late 1960s and early 1970s. Among the first interest-free financial institutions that were opened was in a small town in Egypt. The institution paid no interest on deposits, and it did not charge interest on its loans. It worked strictly on the principle of profit and loss sharing. I'll come back to this to how this works in a minute. Another push for Islamic banking came in the 1970s as a result of the sharp increase in oil prices that brought large amounts of wealth to the Gulf states in the Middle East, such as Saudi Arabia, Kuwait, and the United Arab Emirates. These countries provided the bulk of the capital in the 1970s and 1980s to establish large numbers of institutions called Islamic banks, first in the Middle East and then elsewhere. By the early 21st century, Islamic banking has spread to many countries around the world. Today, Islamic banks control hundreds of billions of dollars worth of assets. It has become a massive industry. The key point about Islamic banks is that they are supposed to be doing business, that is, in the business of banking, on the basis of profit and loss sharing. So that is the basic principle, profit and loss sharing. I'll explain how this works in a minute. So how are Islamic banks different to conventional banks? By conventional, I mean interest-based banks. The most important difference is that Islamic banks do not deal with interest. At least that is the theory. Islamic banks have other characteristics that distinguish them from other banking institutions. The first is the Islamic banks avoid a range of activities that are prohibited by Islam. This is in the case of investing the money of the bank. For example, investing in businesses that engage with alcohol, meaning selling wine and things like that, pig meat based products, gambling, or pornography. This means Islamic banks do not provide funds for such businesses. Islamic banks avoid areas of investment or profit making that deal with things that are Islamically prohibited. Another distinction is the way Islamic banks make a profit to cover their costs and also to provide a return for the investors. While they try to avoid interest-based transactions, that does not mean that they operate for free or make no profit. Instead, they use other mechanisms to achieve this profit while at the same time avoiding interest. So let us look at a little more closely at how these transactions of Islamic banks work. So what are some of the most common Islamic banking instruments that these Islamic banks use? That is, transactions that avoid interest. Instead of giving you lots of details that might be quite challenging, let me give a few examples. So hopefully through these examples you can understand how Islamic banks function. So my first example is this. If you want to buy a car and go to an Islamic bank to get a loan to buy that car, the Islamic bank will not give you a loan. But depending on your financial position and your ability to repay in future, the Islamic bank may buy the car that you want from a dealer and sell it to you at a profit. For example, if the price of the car is $50,000 at the dealer, the Islamic bank may buy the car for $50,000 and then sell it to you for $55,000 and may ask you to pay the $55,000 over a period of time, say 3 to 5 years. In this transaction, the bank makes a profit of $5,000. In fact, a lot of Islamic banking transactions can be very similar to this one as far as consumer finance is concerned. You owe, in this case, $55,000 to the bank and no other payments. You pay that over an agreed period of time, say 5 years or 3 years. No interest will be charged on this amount. The bank cannot vary this amount, even if you get into financial difficulties. Let me give a second example. If you want to set up a business and you do not have the necessary capital, you may want to approach the Islamic bank with your business proposal. Depending on the quality of the business proposal and profitability and the like, the Islamic bank may become a partner with you in this business and provide the necessary capital, say $100,000. You manage the business, and if the business makes a profit, that will be shared between you and the bank. This can be any ratio such as 50-50 or 40-60 or any other agreed upon ratio between you and the bank. But if the business makes a loss, because the business provided the capital, the entire capital, it is the bank that will suffer the loss. You lose your time and effort. The idea is the person or the institution that provides the capital will suffer the loss. Of course, if there's profit, they'll get a profit too. Let me give a third example. In this case, you want to set up a business and you have some capital also to contribute. In this case, the Islamic bank may become a partner in your business and provide the rest of the capital. You manage the business, and at the end of the year, if the business makes a profit, you and the bank will share in the profit according to any agreed upon ratio in advance. If the business makes a loss, you and the bank will share in the loss according to your capital contribution. If you provided 20% of the capital and the bank provided 80% of the capital, your share of the loss will be 20% and the bank's share of the loss will be 80%. But as far as the profit sharing is concerned, that can be any ratio agreed upon between you and the bank. Let me give a fourth example. In this case, an airline business wants to buy an aircraft or to have access to an aircraft. The business approaches the Islamic bank, and after the necessary investigations and analysis, the Islamic bank may provide the finance for this aircraft, and this arrangement could be a lease agreement. The Islamic bank owns the aircraft and then leases it to the airline. The point is that Islamic banks have found ways in which they can engage in various types of business activities and transactions that would allow them to make a profit. Islamic banks are businesses, they are not charities. In terms of depositors of Islamic banks, they have the option of putting their money, that is deposits, with a view to get a return on the deposit or to keep the deposit with the bank just for safekeeping with no expected return. Following the principle of profit and loss sharing, deposits that are expecting a return on them will be considered investment deposits. This means the depositors will share in the profit the bank is making, and if the bank made a loss, the depositors will also share in the loss. This is how, at least in theory, Islamic banks are supposed to work. In practice, things might be a little different from bank to bank and from country to country. So these are just a few types of instruments that have been developed to meet customer needs by the Islamic banks. They allow Islamic banks to be profitable while at the same time avoiding the use of interest, which they consider to be riba. Let us now look at Islamic banking in Muslim majority countries. We'll look at a couple of examples. Let us look at Iran first. After the establishment of the Islamic Republic of Iran, Islamic Republic in Iran in 1979, that is under Ayatollah Khomeini, Iran's banking system was changed to what Khomeini considered to be an Islamic system. In 1983, all banks, that is Iranian banks, were instructed to harmonize their commercial activities with the prohibition of riba. In practice, Islamic banks in Iran have found ways to give bank depositors a return without putting their money at risk. The kind of Islamic banking that exists in Iran is somewhat different to the way Islamic banking is practiced elsewhere, for example, in Kuwait or Saudi Arabia or even Malaysia. In Iran, the entire banking system was changed to an Islamic one, of course, according to Khomeini's interpretation of what an Islamic system is. Conventional banks, therefore, in theory, have no place in the Iranian system. In almost all other Muslim majority countries, the banking system, by and large, is a dual system. The conventional interest-based banks work side by side with Islamic banks. So you have two systems working side by side. For example, in Kuwait, there are conventional banks and Islamic banks. Kuwait Finance House is the second largest retail bank in Kuwait, and it is considered an Islamic bank. The bank provides services that are compliant with Islamic law, encompassing real estate, investment portfolios, trade finance, and other forms of finance. In the United Arab Emirates, Dubai Islamic Bank was one of the first Islamic banks to be established. It works side by side with many other conventional and Islamic banks in the United Arab Emirates. In countries like Malaysia and Indonesia, there are large numbers of Islamic financial institutions, again side by side with conventional banks and financial institutions. There is also a major Islamic International Development Bank based in Jeddah in Saudi Arabia, which provides development finance to Muslim majority countries on the basis of Islamic principles. But the reality is, in the vast majority of Muslim majority countries, it is still the conventional interest based banking system that dominates. Islamic financial institutions are still relatively small players, even in Muslim majority countries, compared to the conventional interest based. So, what are the challenges for Islamic banks? Since Islamic banking is a relatively new industry, there are obviously certain challenges. The first is the lack of standard practices and rules. Islamic banks and financial systems in different parts of the world work somewhat differently. They have their own Islamic Sharia supervisory boards that advise on transactions and determine what is permissible and what is not as far as the transactions of the banks are concerned. The lack of an overarching authority over Islamic banks globally and clear legal rulings on how they work means there is a lot of variation between countries and even between different banks in the same country. Some Islamic or Sharia supervisory boards impose a stricter interpretation of riba than others. The challenge is the complexity of the contracts that need to be put in place between the bank and its customers for a certain transaction to occur. These arrangements increase the legal risk in both the drafting stage and if something goes wrong and there is a dispute. It is also risky for Islamic banks to purchase large assets for their customers. If something goes wrong and the customer cannot pay back the amount that is borrowed, the bank may end up stuck with an asset that is difficult to sell. In this case, they cannot recoup the money spent. Islamic banks also face liquidity issues as they are unique institutions subject to different rules in comparison to conventional banking and financial institutions. They cannot borrow funds in the same way other banks do to keep themselves afloat if economic and financial conditions change. Even with these challenges, Islamic banks are considered to be prospering in the current environment. So, what is the future of Islamic banking? It seems clear that Islamic banking is here to stay. Since it first emerged, more and more Islamic banking institutions have been established. Banking and finance products are continually being refined, and new products are emerging to meet customer needs, while also being compatible with Islamic requirements. In many countries around the world, Islamic banks have been successful in attracting billions of dollars of deposits. For example, the Kuwait Finance House, which I mentioned earlier, holds roughly 1/5 of total deposits in the country. The Jordan Islamic Bank has succeeded in attracting deposits from poorer people who had not previously used banks. Islamic banking is also growing in popularity in Asia, particularly in countries like Malaysia and Indonesia. Another recent development is the offering of Islamic banking facilities or products in conventional banks. Some European and American banks are now offering Islamic financial products to their Muslim clients. Islamic financial instruments are increasingly accepted internationally, even in non-Muslim majority countries. And the basic principles are generally agreed upon and understood among conventional bankers and institutions. This makes Islamic banks increasingly accessible and acceptable, not just locally in a particular country, but also internationally. A question for us is Islamic banking available in Australia? Since Islamic banking is becoming more widely acceptable, even in non Muslim majority countries, you may be wondering whether Islamic banking is something that is available here in Australia. In Australia, there aren't any Islamic banks as yet, but there are institutions, financial institutions, that are trying to provide Islamic finance to Muslim clients in Australia. The first such institution was Muslim Community Cooperative of Australia, or MCCA, which was established in the late 1980s. It continues to this day in Melbourne and Sydney, but it is still a relatively small player in Australia's financial system. There are a number of such other Islamic financial institutions, some of which focus on investment, such as Islamic superannuation funds, and others to provide financing, for example, housing for Muslim customers who do not want to borrow money at interest. In addition to these financial institutions that are relatively small, some of Australia's conventional banks also offer options for Muslims. For example, some major banks, such as the National Australia Bank, offer certain forms of finance that do not explicitly involve interest, so that they meet Islamic requirements, even though they are not called Islamic banking products as such. A key point to remember is that the vast majority of Muslims in Australia are also customers of conventional interest based banks. Many observant Muslims who believe that Riba equals interest still engage with interest based banks, and they'll justify their practice as being based on the concept of necessity in Islamic law. This concept of necessity allows Muslims to engage in certain practices in certain situations that otherwise might be considered prohibited normally under Islamic law. In Australia, for example, it is necessary to have a bank account even to get one's salary paid. Necessity provides a justification for many observant Muslims, even if they believe that interest is riba. Many Muslims simply do not see that interest is equivalent to riba, and therefore they see there is no need to avoid conventional banks and interest. In the second part of this lecture, let us briefly look at charitable giving in Islam, which is a very important part of Islam. So, first, the importance of charitable giving in Islam. Using one's money for charitable purposes is something that is highly regarded in Islam. There are many verses in the Quran that speak of the importance of giving. Muslims are encouraged to help the poor, the destitute, the orphans, the widows, and others in need. They are to do so in secret, without boasting and without expecting anything in return. Charitable giving is an act that will be rewarded, and there are many references to this in the Quran. There are two basic types of charitable giving, what is called sadaqah and zakat, two Arabic words. So, what is sadaqah? The word sadaqah comes from an Arabic root which means purity or righteousness. It is described as any form of charitable giving that is given voluntarily to gain favor with God. This means that sadaqah doesn't necessarily have to be in the form of money. It could be a simple act of kindness towards another human being or even an animal, saying a kind word, removing the difficulty a person is experiencing, giving water to an animal, or offering food to another person are all forms of sadaqah. Sadaqah can be given by anyone to anyone. Let us look at zakat. Zakat refers to the obligatory charitable giving. It is generally paid once per year. Unlike sadaqah, there are specific rules around the giving of zakat, the forms it can take, and how it is to be used. Let us look at these very briefly. First, what is zakat? Zakat is not a set amount, it is a percentage. Generally speaking, it consists of 2.5% of a person's annual savings, or in the case of businesses, 2.5% of their business profits. There are, of course, a lot more details when it comes to different categories of wealth and what can be considered zakatable. The key point is that a person who has excess wealth is expected to share that wealth with others or use that wealth, circulate that through investments so that overall the society and the individual benefit. According to the Quran, God does not look favorably at people who hoard the wealth, do not share that with those in need, and are not generous. Zakat is a form of obligatory giving. It is part of Islam's system of wealth distribution. So, who are the recipients of zakat according to the Quran? Unlike the sadaqah, which can be given to anyone, there are rules around who can receive zakat. The Quran specifies 8 categories of people who can receive it. They include the poor, the destitute, those in bondage, those who are in debt, the traveler, and also in the way of God, and those who administer the collection of zakat, and those who have converted to Islam and are in need. These 8 categories are the ones that are mentioned in the Quran, and Muslim scholars believe that only these categories of people may receive zakat. But these categories can be interpreted in a way that takes into account, for example, the modern context. In the modern period, zakat can often go to the poor, the needy, and disadvantaged, and also for the purposes of supporting students, educational institutions, refugees, hospitals, and in general institutions and works that are there to support those in need. Some of the categories the Quran mentioned, for example, slaves or those who are in bondage, may not be very relevant today. But that category also can be interpreted to mean freeing people from all kinds of other slavery like institutions. Another difference between zakat and sadaqah is who is expected to give it. Zakat is something that is obligatory for adult Muslims who are able to provide for more than their daily needs and have savings over a particular amount for the period of a year. Those who are unemployed or who are not earning enough to provide for themselves do not have to make the obligatory payment. Zakat is extremely important for Muslims. It is one of the 5 pillars of Islam. The Quran speaks of zakat as being the next most important Islamic practice after prayer. There are ways of managing zakat in different Muslim majority countries. In some countries, there are state institutions or government agencies that collect zakat and distribute the funds to those who are supposed to receive zakat. In other countries, those individuals who have zakat funds to distribute, they give that privately to individuals who are poor or organizations that are helping the needy and disadvantaged. In a country like Australia, individuals would often give zakat privately, either locally in Australia or overseas. So, in summary, this lecture has focused on issues related to the use of money for Muslims. We first explored the concept of riba. Riba is something that is strongly prohibited in the Quran. There are numerous verses that talk about penalties for dealing in riba. However, the reason for the prohibition and how this should be applied in the modern period are still debated among Muslims. In recent years, Islamic banking institutions have been established to ensure that Muslims can carry out banking and finance transactions that are consistent with Islamic requirements, such as the prohibition on riba. This is a new and growing industry in many parts of the world, including in Australia. It is even common to find Islamic banking products at conventional banks in many parts of the world today. Another issue concerning the use of money is charitable giving. Giving money for the purpose of charity is very strongly encouraged in Islam. In this lecture, we have looked at the two main forms of charitable giving: zakat, the compulsory form, and sadaqah, the voluntary form. Thanks for watching. We hope this deepened your understanding of Islam. Be sure to check out the other videos in this series. Keep exploring. Don't forget to subscribe.